We have great energy here to talk about opportunities in the market on a week where this could be the worst week of the year. Ted Weisberg, founder, president, Seaport Securities, is with us. People are feeling some pain, Teddy. I mean, they've seen their 401k. Don't look at the 401ks and IRAs. What do you tell them right now?
This is the time to go fishing and not look so close. No, it's I think it's been coming for a couple of months.
Yeah.
It's always painful. I mean, we saw it in January where the Dow outperformed the other popular averages. All three were good, but the Dow was twice as good. And I think that continued to a certain extent in February. Clearly, there was a shift going on, very subtle. But, sometimes it's tough to read the tea leaves, especially if you've been making a lot of money in certain sectors of the market. It's hard to pull the trigger because you think it's never going to end. But clearly, it's problematical now. But I think the overriding reasons, are the uncertainty coming out of Washington. Now, there's nothing unique about that observation, but clearly, uncertainty breeds volatility when it comes to the stock market. And the stock market can deal with anything, Nicole. Bad news, good news, but uncertainty is a death knell for the stock market. And like it or not like it, every day we're getting these new kind of political missiles coming out of Washington, good, bad, or indifferent. And the bottom line is people are getting a little nervous and they just don't know what to expect. Now, maybe in the end it'll all be fine. Hopefully it will be fine. But for
is that what you're banking on? Are you banking that by year end we're at new highs or higher than when we are now kind of thing?
Well, it's clearly not a zero-sum game. We're not going to zero. But we've had two very good years, especially with the techs. Look at 23 and 24. If you took 7 or 8 big tech names out of the S&P, instead of being up 24%, the S&P was up 15%, which is still terrific. But you've had a handful of names kind of driving the train here for a couple of years. It simply doesn't go on forever. It doesn't mean we need to throw the baby out with the bathwater.
Right.
But, things get overbought and they get oversold. There's nothing rational about how these stocks trade. On the other hand, there are sectors right now that are doing quite well. Today, Bristol Myers, for example, a new high today. For the last 2 years, the big pharmaceutical stocks were complete dead money. New high for Bristol. Even Pfizer, which can't get out of its own way, is starting to pick its head up.
That's why you got to stick around a long time, Teddy, so you can see them all hit highs, right?
Well, it's all about a long life, and my life's getting shorter every day.
No, but you've been buying. And a name that you liked from day one, from the IPO, was Facebook Meta. Meta's a name that you have liked from the beginning of time, had an incredible run up to $740.
Right.
And has since pulled back, but has been a winner year to date. Now that it's down for this month, 1 month down 14%. Are you buying more?
Well, it's of those big names, I think it's only 1 or 2 that's still up percentage-wise for the year.
You're right.
We're going to buy some more Meta. It's a timing issue.
So you're buying Meta and you're buying Oracle. Is that right?
We would buy, and in the tech sector, we'd buy. Well, Meta's dipped pretty good. Oracle looks like maybe it's found a price level where it's okay. But yes, both those names we would buy. On the other hand, we own the big pharmaceutical stocks, and that's terrific. And we talked about Nestle's, I think, a couple of months back.
Yeah.
Nestle's was in the low 80s at the end of December. It's 101 today.
NSRGY. I'm putting that in because I want to check it out. Yeah, it has run up from $80. And now it's at 102.
102.
You made another $1 on the way over here.
Well, I did. Life is good.
Yes.
But I think the point is that there are still things to do. It's not the end of the world. Yes, the big tech names are getting clobbered. And who knows how much more downside there is. But at some point, they're going to be okay because that is still, at the end of the day, is where the growth is. That's where the earnings are. So I wouldn't discard the tech names. But meanwhile, look at even today, Verizon, a new high today for Verizon. If I had if we had talked about stocks and I said, gee, I think you should buy Verizon a month ago, I think you probably would have pulled the plug on me.
I got to rub my eyes
right.
looking at that.
Exactly.
I can't even believe that myself. It wasn't long ago. It was at $37, and telecom was out of favor, and this was a dividend payer, and my dad loved Verizon, right? It was definitely...
That's right.
Motherhood
apple pie and telephone, and now Verizon. And telephone's been on the new high list almost every week. So what is it telling us? There's simply been a shift away from these big tech names into other sectors of the market. So there's
Would you
always
go
something
back to
do.
tech again at some point, or no? You named the names that you like. You like tech and Oracle. How about Meta and Oracle? There's been a lot of inflows going into Europe, more so than in the last decade, let's say.
Right.
Have you been looking there, or no? You're more U.S. centric.
Well, Nestle's is
that's European,
yeah,
right?
that's European, and we didn't talk about it, but this EssilorLuxottica, that's a French-Italian company.
Yes,
so, no,
ESLOY, right? That's a name that you've liked for a long time. ESLOY makes the glasses.
The glasses.
Yeah, and Ray-Bans too, right?
Ray-Ban, the Meta Ray-Ban product, and
you've
they
done
make
so well
the
with
lenses, the frames, but so there's
1 year,
there's two names.
So you're still in those.
We're still in them.
those, yeah.
And we like the rails still. We're in the rails.
Which ones?
We're not big tech investors, but to get back to tech.
Which rails do you like?
Union Pacific and Canadian Pacific. But they're probably all okay. I mean, they're not reinventing railroads. It's a great business. Boring, completely boring, but it's a great business.
Understood. And to get back to tech, you did have a final thought there.
Well, the final thought is, at the end of the day, you still want to have exposure to tech because that's where the growth is. And sure, at the moment they're out of favor. We don't know. You don't want to be a bottom picker, but at some point, Meta is probably trading now close to 25, 24 times earnings. It's still a big growth stock. At some point, it's probably okay. Is it today? Is it tomorrow? Unfortunately, they don't ring a bell and tell us when to buy them. So you just have to kind of hold your nose sometimes and jump in.
Yeah, and for the grandkids, do you tell them, go all in, put all your money in the market type of thing because the compounded dollar does so well over the years? Or do you dollar cost average? What do you tell folks when they say, I want to sort of start something for my kids? What do you say?
I think it's a fair question. And the answer is, when it comes to stocks, it's basically time and patience. Obviously, the selection process is important, but you don't need to be right all the time. If you can pick 10 stocks and be really right 2 or 3 times, it's going to be a giant home run. But the answer is time. The younger you are, obviously, the more time you have, because time and patience works. This is a great way to build assets and build wealth. And so, if for grandkids, I'm all in.
All right.
At my age, I don't buy green bananas anymore. But for younger people, 40s, 50s, 60s, whatever, all in.
Ted Weisberg, Seaport Securities. Always great to have you on. Thank you so much.
Thank you, Nicole.
And it was nice to circle back on some of those other names that you had discussed here. Thank you, Ted Weisberg.